Subscribe to my channel Report Stock.
Okay, let's unpack this. We loved diving into the numbers, right? Finding those little insights that really tell a story. And today, well, we've got a recent financial report that's definitely buzzing, gives us a great window into enterprise AI. We're taking a deep dive into Palantir Technologies Inc.'s Q2 results. That's for the quarter ended June 30, 2025. And we're basing this on their official press release, Palantir, Rekordnyheter avgjeld na Q2 2025. So our mission really is to cut through the jargon, pull out the important bits and figure out what's really driving their performance, especially with what their CEO has been saying about AI. We want to give you that shortcut to understanding why these numbers matter and what they signal about AI and business more broadly. So right off the bat, the CEO, Alex Karp, he called it a phenomenal quarter, said they continue to see the astonishing impact of AI leverage and that they basically crushed consensus expectations. Pretty strong words.
Yeah, that's quite the statement. And what's fascinating is how they immediately tie it to AI. And then you see that reflected pretty directly in the financials. So let's look at the top line numbers for Q2. Total revenue, it grew 48% year over year.
Over 8%?
And 14% just from the previous quarter, hit $1.004 billion.
Okay, so they're in the billion-dollar a quarter club now. That's a big milestone.
It is.
But, to really get the story behind why it's growing so fast, we kind of need to break it down, right? Region, sector.
Absolutely. And if you connect that growth to this whole AI adoption picture everyone's talking about, well, the real standout, the absolute star of this report is the U.S. commercial sector.
Right. I saw that. Explosive is probably the right word. U.S. commercial revenue just skyrocketed, up 93% year over year.
93%.
And 20% quarter over quarter. It landed at $306 million. That's like nearly double the growth rate of their overall revenue.
Exactly.
So what is it about the U.S. commercial market specifically? Why such intense growth there?
Well, that AI leverage Karp talks about, it seems directly plugged into this.
Yeah.
It suggests there's a huge appetite among U.S. companies for Palantir's artificial intelligence platform, their AIP.
Yeah.
They want these AI capabilities, and they want them now.
And it's not just the revenue number itself, is it? It's the future commitments, too. They closed a record $843 million in U.S. commercial total contract value, TCV. That's up a massive 222% year over year. Just huge.
222%.
And then there's the U.S. commercial remaining deal value, RDV. That hit $2.79 billion, up 145%. So these aren't just quick wins. They're locking in serious future business.
Precisely. And just quickly for anyone tracking these things, TCV, total contract value, that's the potential lifetime value of the deal. RDV, remaining deal value, is what's left on existing contracts. Seeing both those numbers jump so much, especially the TCV, it signals really strong pipeline health and deep customer commitment. They're not just testing the waters.
Makes sense. Now, while U.S. commercial was, grabbing the headlines, we shouldn't forget their roots in government work. That also grew significantly.
That's right. U.S. government revenue was up 53% year over year.
Still very strong.
And 14% quarter over quarter, reaching $426 million.
So overall U.S. revenue then, combining both.
Overall, U.S. revenue grew 68% year over year to $733 million. So really robust performance across the board domestically. It shows that even with commercial taking off, that diversified strategy is still key for them. It adds stability.
Okay, so beyond those big revenue and contract value numbers, what else points to this momentum they have? It seems like the sheer number of deals and the size of those deals is also part of the story.
Definitely.
In Q2 alone, Palantir closed 157 deals worth at least $1 million.
157.
Yeah, and 66 deals of at least $5 million. And get this, 42 deals worth $10 million or more in one quarter.
That really reflects an ability not just to land new clients, but also to expand significantly with existing ones, getting those bigger, more strategic contracts. And their total TCV across all sectors hit a record $2.27 billion.
Wow.
Up 140% year over year. That signals clients are moving beyond maybe smaller pilot projects into really substantial long-term commitments.
It's not just bigger deals, right? They're also bringing in more customers overall. Customer count grew 43% year over year and 10% just in the quarter.
So you've got more customers coming in the door.
And signing bigger deals. That's got to be a powerful combination for growth.
It absolutely is. But, growth is one thing. Profitability, efficiency.
Yeah.
That's what makes a business sustainable, particularly in software and SaaS. And Palantir made a point of highlighting their Rule of 40 score came in at 94%.
94. Okay, for listeners who follow software metrics, the rule of 40, that's your revenue growth rate plus your adjusted operating margin. And 40% is considered pretty healthy,
Right.
so 94%. Yeah, the CEO said they were obliterating the metric.
Obliterating is probably fair, yeah. It's exceptionally high.
What does hitting that kind of number tell us about how they're running the business while growing so fast?
It tells you they're managing their costs incredibly effectively, even with that aggressive expansion. Their adjusted income from operations was $464 million. That's a 46% margin. Very strong.
Okay.
And maybe even more impressively, adjusted free cash flow hit $569 million. That's a 57% margin.
57% free cash flow margin.
Yeah. It shows fantastic cash generation alongside the growth.
Right.
That cash is crucial, right, for reinvestment, for stability.
Yeah, absolutely. And they also reported GAAP net income, didn't they?
They did. GAAP net income was $327 million, a 33% margin. GAAP EPS, earnings per share, was a 13 cents. Adjusted EPS was 16 cents.
And they finished the quarter with a lot of cash on hand, too.
A healthy amount.
Yeah.
$6.0 billion in cash, cash equivalents, and short-term U.S. Treasuries.
So a very strong financial cushion, lots of flexibility there.
Right.
Okay, so Q2 was clearly phenomenal. What does this performance mean looking ahead? For the rest of 2025, they gave some guidance, right?
They did, and it's very optimistic, as you'd expect after a quarter like that. For Q3, the current quarter, they're projecting revenue between $1.083 billion and $1.087 billion.
Which would be.
About 50% year-over-year growth if they hit that. So yeah, no signs of slowing down there.
And for the full year, 2025.
They raised their full-year revenue guidance, now expecting between $4.142 billion and $4.150 billion. That points to about 45% growth for the entire year.
And critically, they also bumped up the U.S. commercial guidance specifically.
Yes, that's key. They now expect U.S. commercial revenue over $1.302 billion for the year.
Which represents growth of...
At least 85%.
Okay.
So they clearly see that U.S. commercial engine continuing to fire on all cylinders.
Wow. 85% minimum.
And they're raising profit guidance, too, expecting adjusted income from operations between $1.912 billion and $1.920 billion for the year, and adjusted free cash flow between $1.8 billion and $2.0 billion. Okay. And they reiterated they expect GAAP operating income and net income in every quarter this year. So, consistent profitability.
Good sign?
But it is important, companies always include those forward-looking statement warnings. Standard practice.
Yeah.
And Palantir specifically mentioned potential risks around issues raised by the use of artificial intelligence in our platforms.
Right.
It's just a useful reminder, provides a bit of context. Even with all this excitement and rapid adoption, the AI field is still evolving, and there are always factors that could impact results.
Good point. Okay, so pulling it all together, what's the main takeaway for you, our listener? Palantir's Q2 results show a company hitting hypergrowth, especially in the U.S. commercial space, and it seems heavily driven by what they call that astonishing impact of AI leverage. But they're not just growing revenues, they're doing it profitably, generating strong cash flow, and building a really robust pipeline of large committed deals.
Yeah, it's a really compelling snapshot, isn't it? A company built on data integration, now really capitalizing on this huge wave of demand for practical, deployable AI solutions in the business world.
Definitely.
Yeah.
So here's something for you to think about after this. A provocative thought, maybe. Given Palantir's performance, particularly that U.S. commercial surge linked to AI leverage, what does that imply about how fast other industries, maybe more traditional ones, might start adopting these kinds of advanced AI platforms? Is this an outlier or the start of a much broader, faster shift?
And maybe think beyond just the tech itself.
Yeah, like what are the non-technical hurdles? Things like changing how people work, reorganizing teams. What challenges pop up when you try to integrate this stuff that quickly?
Lots to chew on there. We definitely encourage you to keep exploring this intersection. AI, business strategy, finance. It's fascinating.
Absolutely. Well, this has been another deep dive aiming to give you that shortcut to understanding the numbers. We really hope it sparked some aha moments for you. Until next time.
Subscribe to my channel Report Stock.